BigBear.ai Holdings Inc., $5.98 USD. As we look at the charts right now on this Wednesday morning, November 19, 2025, BigBear.ai is trading at exactly $5.98 USD, showing a slight intraday consolidation after what has been a truly chaotic week for the ticker. If you are watching the order book, you are seeing a battle between bulls trying to hold the $6 line and bears pushing for a retest of lower support levels, with the stock currently hovering just under that psychological $6 mark. We are seeing a mix of profit-taking and tentative buying, which usually happens right after a major catalyst event like the one we just witnessed. The market is trying to decide if the recent news is enough to justify a permanent repricing, or if we are about to see a gap fill to the downside. You came here expecting a straightforward story about an AI stock riding the wave of national security spending, likely anticipating that I would tell you this is the next Palantir, or that it is guaranteed to triple overnight because of the defense sector supercycle. The expectation is always that AI plus defense equals instant parabolic returns, but the reality is far more nuanced and, frankly, much more interesting. The reality is that BigBear.ai is currently undergoing a painful but necessary metamorphosis, shifting from a service-heavy government contractor into a product-focused software powerhouse, and the market is punishing it for the growing pains while simultaneously rewarding it for the vision. The disconnect between the retail hype on social media and the institutional caution we see in the dark pool data is creating a tension that could snap in either direction. While the headline expectation is growth at all costs, the reality revealed in their latest Q3 report is actually a revenue decline, which forces us to ask a very difficult question. Is this company shrinking to grow, or is it just shrinking? Let's look at what has actually happened over the last few trading sessions, because the price action has been nothing short of electric. Just days ago, around November 11th, we saw BigBear.ai stock absolutely rip higher, surging over 23% in a single session. This wasn't just a random pump, it was a direct reaction to two massive pieces of news that hit the wires simultaneously. First, the company dropped its Q3 2025 earnings, which we will tear apart in a moment, and second, they announced the definitive agreement to acquire Ask Sage for $250 million. This acquisition is the curiosity loop that has everyone talking. Ask Sage is a generative AI platform specifically built for the high compliance needs of the federal government. Think ChatGPT, but with security clearance. Investors saw this and immediately hit the buy button, thinking this solves the product scalability issue. However, as the dust settles and we sit here at $5.98 USD, we are seeing the sell the news phenomenon kick in. The volume has cooled off from that massive 100 million share day, and now we are seeing the stock drift as traders digest the fact that this acquisition, while strategic, is going to take time to integrate. If you are holding this stock in your Robinhood app or tracking it on your SoFi Invest dashboard, you might be feeling a bit of whiplash. One day your portfolio is up double digits, and the next you're watching those gains bleed out. This volatility is characteristic of small-cap defense tech. Unlike Apple stock, which moves with the weight of a supertanker, or Tesla stock, which moves on Elon's tweets and delivery numbers, BigBear.ai moves on contract vehicles and backlog adjustments. The recent price action tells me that the market is still skeptical. If the market were fully convinced, we would be trading above the $7.50 resistance level right now. Instead, we're stuck in this $5.50 to $6.50 channel. The bears are arguing that the 20% year-over-year revenue decline reported in Q3 is a red flag that cannot be ignored. They are pointing out that you cannot acquire your way to growth forever if your core business is bleeding. On the flip side, the bulls are arguing that the decline is due to the winding down of low-margin legacy contracts and that the quality of the revenue is improving. Let's talk about that earnings report because it is the anchor for everything happening right now. On November 10, 2025, BigBear.ai reported revenue of $31.1 million. Now, this beat the analysts' estimates, which is why the stock popped initially. But it's down from $41.5 million in the same quarter last year. When you see a growth stock report the 20% drop in sales, you have to pause. The company attributed this to lower volumes on certain U.S. Army programs. This is the reality check I mentioned earlier. The expectation is that defense spending is infinite, but the reality is that government contracting is lumpy, bureaucratic, and prone to delays. However, the bright spot, and the reason the stock hasn't collapsed, is the bottom line. They posted a net loss of just $0.03 per share, which was significantly better than the feared $0.07 loss. This shows that management is getting serious about cost controls. They aren't just burning cash for fun anymore, they are tightening the ship. For those of you using Schwab Intelligent Portfolios or seeking investment help from a traditional advisor, they would likely tell you that narrowing losses is a precursor to profitability, and that is a very bullish signal for a company of this size. The acquisition of Ask Sage is the wild card here. By paying $250 million, mostly in stock, which dilutes current shareholders, BigBear.ai is making a massive bet on generative AI for the public sector. Nicholas Chaillan, the founder of Ask Sage and the former chief software officer of the Air Force, is joining as CTO. This is a talent acquisition as much as a technology one. The market is fascinated by this because it gives BigBear.ai a legitimate product that can be sold off the shelf to government agencies that are desperate for AI tools but terrified of data leaks. If you're looking to invest online and are scanning for catalysts, this integration is the one to watch. If they can cross-sell Ask Sage to their existing Army and intelligence customers, that $33 million revenue figure could look very small in a few quarters. But that is a big if. Integration risks are real, and merging cultures between a scrappy AI startup and a defense contractor can be messy. We also need to discuss the institutional landscape because that is who really moves the price. When you look at the 13F filings, you see names like Vanguard and BlackRock increasing their positions, while some hedge funds are playing the volatility with options. This isn't just a retail play anymore. The fact that institutional ownership has ticked up suggests that smart money is starting to see value in the turnaround story. They are looking at the enterprise value, the backlog of $376 million, and the cash position, which saw a massive jump recently, putting them in a much safer liquidity position than they were in 2024, and are deciding it's worth a nibble. Unlike NVIDIA stock, which is owned by everyone and their grandmother, BigBear.ai is still a bit of a contrarian bet. It is for the investor who thinks Palantir is too expensive at $160 plus and wants to find the next small cap player that can eat up the scraps of the defense budget. Speaking of competitors, you cannot analyze BigBear.ai without looking at the broader sector. You have Palantir, PLTR, sitting at massive valuations, effectively setting the ceiling for what a defense AI stock can be worth. Then you have C3.ai, which struggles with its own profitability issues. BigBear.ai sits somewhere in the middle, smaller, more nimble, but also more fragile. The defense sector is currently undergoing a shift where software is becoming more important than hardware. We're seeing this with the rise of drone swarms, cyber warfare, and automated logistics. BigBear.ai's digital twin technology, which allows commanders to simulate battlefields or supply chains, fits perfectly into this. But the government is a slow customer. It takes months, sometimes years, to go from a pilot program to a program of record. This is the frustration that many retail investors feel. They buy the stock thinking AI is fast, but government is slow. You have to reconcile those two timelines if you want to hold this stock. Let's take a brief step back to understand the business model for those who are new to the ticker. BigBear.ai markets itself on decision dominance. Essentially, they ingest massive amounts of dirty, complex data from satellites, logistics logs, sensor feeds, and use AI to clean it and present actionable options to decision makers. They have historically been a service shop, meaning they sold hours of human labor. That is a low-margin, hard-to-scale business. The pivot they are executing right now is towards cyber-physical solutions and software products. They want to sell a license, not just a consultant's time. The Ask Sage deal is the accelerator for this. If they can become a product company, their valuation multiple expands significantly. A service company trades at 1x revenue. A software company can trade at 10x or 20x revenue. That is the arbitrage opportunity here.
If they pull off the transition, the stock at $5.98 is a steal. If they fail and remain a low-margin services body shop, it is likely dead money. Now, I want you to take a second and engage with the community on this. Comment below. Do you think the government will actually trust a private AI company with its most sensitive data, or will they eventually build these tools in-house? And for the shareholders watching, comment below how many shares of BigBear.ai you currently hold and what your average cost basis is. I'm seeing a lot of people stuck in the $8 range from the last spike, and I'm curious where you stand. Let's look at the technicals because the chart is painting a very specific picture. We are currently sitting above the 200-day moving average, which is a long-term bullish signal. However, we are below the short-term 20-day moving average, indicating that the immediate momentum is bearish. The stock is trapped in a consolidation